Welcome to it. Time to have a look at what happened on the markets today. Starting off with the Asian side of things, we did see stocks on that particular side broadly higher as investors shrugged off the weaker than expected April U.S. jobs report. When you look at the individual indexes, the Nikkei in positive territory, up 0.5%. We also saw the same performance when it comes to the greater Chinese markets, although they were a little bit mixed. When you look at the Shanghai Composite, that was up nearly 0.25%. Its Shenzhen component, though, also up 0.1%. And what we saw play out in Hong Kong over on the Hang Seng side of things, it was in positive territory, although managed to close flat on the day. As we move further afield to look at what was happening on the European side of things, stocks on that particular front a little bit mixed. Of course, investors at this particular time digesting the prospects of lower for longer interest rates and the subsiding inflationary pressures. When we look at those individual bourses at this particular time, FTSE 100 up 0.1%. The German DAX bucking the trend there, down nearly 0.25%, also followed suit by the French CAC. As we look at the U.S. futures on that particular front, mostly flat. But then when we bring it locally, the JSE right now looking quite good, led by the resources and the financials. We did have some news come out through SENS throughout the morning. We had Q1 earnings coming out of Anglo Gold Ashanti. That share down about 1.6%. And we also had the news locally that Clicks will be acquiring the pharmaceutical divisions within Pick n Pay. That share price for Clicks reacting quite positively. But to give us a full understanding of how all of these elements are playing out on the global markets and local markets as well, we are joined by Bright Khumalo, who is from Vestact Asset Management. Bright, thank you so much for your time.
Lovely being in your show. Thank you.
So let's talk about, the JSE performance as well as the Rand. I see that's making news throughout this morning.
Yes, I mean, you're looking at the Rand, very strong at 1404, strong about, 0.12%, which isn't much, but I mean, if you remember, 3 months ago, we were actually north of 15. So this has held up quite nicely. And obviously, most of it is coming from that weaker US dollars, as you know, the Fed basically has announced that they're going to be more accommodative for longer. And obviously, printing money there. There's a 4.3 trillion US dollars worth of stimulus waiting, to also, go into circulation. So obviously, that's not good news for the US dollars, and obviously it's great news for us, the Rand here, where we're not doing something similar. So, and as a result, I mean, like you said, our markets are green. We're up about 2/3%. Resources are leading the charge, as well as financial. So a lot of SA Inc. In the green there, obviously, with Kumba Iron Ore, being, the shining star of today, up 4.8%. Glencore up 3.2%, and BHP Billiton up, just under 3% there. So it's a good day to be invested today, I guess.
So let's talk about, the news from Click saying that they will be acquiring 25 of Pick n Pay's retail pharmacy divisions. I mean, some might say that actually makes sense because when you look at it from a Pick n Pay perspective, those divisions weren't quite massive.
Yeah, I mean, I almost want to say like the value add here was pretty tiny. They didn't have the scale, right? For example, Clicks had over 600 stores. So, in comparison, it just makes sense that these, be, rebranded and, get bought by Clicks. Because for Clicks, these 25 stores are going to go straight to the bottom line. The biggest thing that they'll have to change, I think, will just moving the people that are working in this pharmacy business of Pick n Pay into their payroll, essentially. And when you look at, proximity of, say, delivery of the items that they actually sell in the pharmacy retail business, it's going to be very marginal when it comes to cost, meaning these 25 stores for Clicks are going to be, profitable from the get-go, which is quite interesting.
The Asian market seems to have shrugged off Friday's weaker than expected jobs report. I mean, it came in that the U.S. added 266,000 jobs in April, massively missing expectations of 990,000. Is this good or bad for markets?
when you read the headlines, they read something like, huge letdown in jobs numbers in April, or even worse, something ridiculous, right? But if we look at where we were this time last year, right, this has, been a great improvement in terms of, getting, the unemployment rate to, below 6% in the United States. And obviously, being the poster child of, capital markets, this is good news. It's just that it wasn't as quick enough as people expected it, which you can, I want to say it's greed. But then again, I mean, they're doing exceptionally well. We wish we had, a 6.1% unemployment rate here in South Africa. We would have taken it. But here's the weird thing. The expectation was, around 1 million jobs were going to be created, but only 266,000 jobs were created. Still a lot of jobs created. It's just that it missed expectation. What it means for markets is, if you look at markets, U.S. markets specifically, on Friday, they ended up in the green. So they just shrug the numbers as it is what it is here. It's bad news, it's good news, I guess.
So when you look at the metal side of things, I mean, iron ore jumping 10%. We also saw a rally in copper. Is this an indicator that the global recovery will expand beyond China at this point?
So the thing is, this is expectations, right? The expectation is that the global recovery is going to be faster than ever. And obviously, if there's 4-point-something trillion US dollars being spent on infrastructure, it's going to be very good for these commodity counters, right? Or these commodities themselves. That's why you're seeing things like iron ore and copper and other commodities actually doing very well. To say, at what rate, the global economy is going to grow, it's going to be interesting, because I mean, we do have, different estimates from, the Moody's of the world and other ratings agencies, but it's going to be very interesting, because the United States didn't grow at 10%, as everyone was saying last year in October. It actually is growing, yes, very well above 6-7% or around there, but it's not as optimistic as people have expected it. And reality at some point will have to kick in.
What key events are you going to be keeping an eye on? We've got US inflation data, we've got Alibaba earnings, and Disney as well.
Look, locally, I mean, we are waiting things like transaction capital, long for life, Altron. It's not, businesses we follow very closely, but transaction capital we do follow very closely. And obviously, Stats SA is also going to be publishing manufacturing and mining production numbers for March. That's going to be quite telling, since... Hi?
No, that's fine. It's going to be quite telling, and I'm sure we're also going to be keeping an eye on that. Unfortunately, we have run out of time, Bright, but thank you so much for joining us this afternoon. That is Bright Khumalo from Vestact Asset Management.